Good morning, everybody. Welcome to Wednesday, the middle of the week. I hope you've
Morning,
all had...
Ryan.
Morning, Kay. You all right?
Yeah, good man. And yourself?
Yeah, not too bad, mate. Not too bad. Bit sitting on my hands a bit trading-wise, waiting to get this ECB stuff out the way, know where we're at, but plenty to be going on with elsewise. Right, not too much data and headlines out overnight, really. So it'll probably be a quick run through of that sort of stuff, and then we'll have a chat about the pricing moves and obviously the yen, the big story again today. Small headline out, well, reasonably small headline out of China, that they're going to be setting up a massive bank bailout fund, adding a bit more of a safety net against any financial stability risks. Said to be in the tens of billions. This fund is going to be. If there's one thing China does do, as we know by their reserve requirement ratio, is they like a lot of money sitting in safety nets for a rainy day, if you like. And this is just another big fund that they're going to be setting up to, if the need be, bail out some of their banks. It doesn't mean that there's impending doom, but as I say, China like to be ahead of the game and make sure they've got those backstops in place. Moving to Japan, we've had quite a lot more waffle from Bank of Japan, government officials. Nothing too strong on the currency. And we also had Kuroda backtracking even further, apologising twice for that comment he made about how households being able to tolerate higher inflation, saying he got it completely wrong, basically. So as I was mentioning yesterday, that it might be something that the Bank of Japan may have misunderstood about the consumer's view on inflation, although his comment hasn't meant that, and he's reversed it and apologised twice now. It's still been a little bit of a wake-up call, I think, for him, that if he thought he knew how the Japanese consumer householder was dealing with inflation, it's been a wake-up call nonetheless. But as I said, we've had Suzuki out as well, commenting not directly on FX levels, said he won't comment on FX levels. But we've not had anything stronger than the market might expect, given that we keep running higher in yen pairs, dollar yen in particular. And what I've noticed is that we tend to seem to be getting these waves of buying after they've spoken. So it's as if the market's saying, well, are they going to say something? No, they haven't said something. Right, we're going to carry on pushing. And I've got a thought that this last phase, this latest phase move higher, is perhaps a bit more speculative than just the pure rate divergence that we've been seeing. I put a tweet out not so long ago, just thinking that, we know where the divergence is now. How wide do you want to make this? We know where the Fed are at. We know the path of the Fed. It's going to take the Fed turning even more hawkish than they already are to grow that divergence, because we know where the Bank of Japan are at. They're going to continue easing. So, there's the divergence trade can only go so far before it needs some other input for it to grow. So the fact that we're seeing this continued move tends to, in my opinion, show that this phase is becoming more speculative. Now, what that'll do is it means that potentially it's a battle going on now between some market speculators, perhaps pushing the Bank of Japan and the Ministry of Finance to a position where they have to increase their jawboning, or in fact further down the line look to intervene. But it's just something I'm got in the back of my mind, that this is more of a speculative type of move than a pure divergence trade type of move. That means that volatility can increase, because as soon as we do get a stronger bit of jawboning from Japan, it could mean we see some steep drops, really fast drops in yen pairs, until the market assesses what that actually means. Does it mean intervention is closer, or is it just strong jawboning? So overall, I think there's going to be some increased volatility coming in, of a more speculative nature. Kay, I don't know if you want to add anything to that.
Yeah, do you want us to talk straight away about the interventions, or are we going to do that afterwards?
Yeah, we can. It's up to you. I mean, you know, Kuroda was out. Just look at the headlines you put up earlier. Even he mentioned it. Let's see if I can find it there. Where is it? Where is it? Where is he? So even here, he was questioning, you know, the divergence trade. You know, how far has it got to go? Because it would need the Fed going much faster than their forward guidance. So even he's commented on it. So perhaps he's thinking it's more speculative.
Then I think it's wishful thinking from his point, because as I put in between brackets, as I think again, because the market can push it. The one thing I would like to add, first of all, of this divergence, interest rate divergence, you rightly say there is also only so much that the divergence can create, because you're not like creating fresh money or creating fresh investment money every day to continue to push. But what we can't forget as well is that those higher rates, and also the curve has been moving higher in the US. It makes hedging costs for Japanese accounts more expensive. So since it's even in Japan, it's not correcting, right, this yen. So I think there are a bit of flows supporting still this move because of the Japanese whales, the insurance companies, GPIF and things like that. I wouldn't be surprised if the next report, for instance, or the next couple of reports see a lot of foreign buying out of Japan. I'm not sure, but I wouldn't be surprised to see pretty big numbers again, because we also had like a failed 10-year Japanese JGB auction. Well, somewhere it's logic. Somebody with half a brain, why would you buy Japanese bonds at maximum 0.25%, where on the rest you can get 3%, right?
Yeah, exactly.
Yeah, but on the other hand, there should still be some local flows, but that has dried virtually up. Therefore, I think we are going to see pretty big numbers in the foreign bond buying again over the last or this week and past week, for instance. So about these interventions, and we were chatting about this in the room this morning. First of all, a bit of a disclaimer, because we have seen a lot of new members come into the MOF. So first of all, it's MOF who decides to intervene, not the Bank of Japan. Okay, Bank of Japan is handling monetary policy. Ministry of Finance is handling the currency level. And there's a lot of new members at the MOF since the Abe Kishida handover. So I don't know whether this system still works, but up to the time where I was in banks and Japan needed to intervene, and we have to stress they needed to intervene to sell yen, mostly for the past 20-30 years. We had warnings, we had steps of warnings, and if they still adopt the same steps, we're still not in danger zone for interventions, because there's still a few steps away. Yeah. Right now, they are just closely watching FX. Closely watching FX in up to 5-6 years ago, let's put it that way, meant the next step would be is that they are looking to see if some of the moves are speculative. Then the last step, and in between there's another one, but the last step would be that they concluded that the moves were speculative. If one sees such a line in the market or coming out on the news wires, out of experience, that's the last warning. That means that they are ready to press the buttons. Yeah. In between, somewhere in between, we could see something, a headline coming out that Bank of Japan is checking rates. So the MOF will decide on interventions, but the Bank of Japan will be the executing via then their agent banks, which are mostly the Japanese mega banks and some foreign banks who are on their intervention list. But again, I'm not going to speculate how many banks are on there, but in my time, we were about 10, 11 banks or so being on the list of the Japanese Interventions Bank. So first of all, there would be the Bank of Japan is checking rates, which usually already puts dollar yen down 50 or 100 points. In this case, in prior, it would have been up, but then relatively quickly come back to the levels where we were before, because they are just checking rates and they are not de facto intervening. But if those things start to come out on the wires, then we know we are getting really close. Again, disclaimer, I don't know whether they still will use the same pattern of play, but that is how they were before. So as it stands right now, the market, well, most of the market must still feel relatively confident and saying like, well, all right, we are still not in high alert, on high alert. So let's continue pushing. But I fully agree with Ryan in saying that these moves, especially the time they happen, which is in the European time zone, so the Japanese have had all the time to do their stuff, they look to be relatively speculative. Yeah.
Yeah, cool. Cheers, mate. Well, we'll look at the pricing price levels in a little bit, just to crack on with some of the other headlines coming out. And I saw Richard's point that he made there about can you give advice on how to use the data, particularly featuring it in trades and stuff. I did touch on that yesterday, but if you weren't around, I'll repeat on that in a bit. One of the things I've noticed is that we're getting some growing calls about when central banks will start cutting rates. Ray Dalio was out with a story saying they're going to start cutting rates as soon as 2024. I thought I saw a CBA bank note saying that the RBA may be forced to cut rates in short period as well. So already we're just getting growing comments about when central banks are going to get to the top of their hiking cycle and then even start to reverse, which is pretty funny because in this day and age, everything is so compact now, that this sort of stuff wouldn't happen over such a short period of time. We wouldn't have a central bank starting to hike, do 2 hikes, and they're already talking about when they're going to cut. But the world we live in now, things happen so quickly and we switch so quickly. And that's what happens in the market as well. They switch from one thing to another. The pendulum swings pretty fast. But anyway, we're seeing some growing calls about when central banks will be cutting rates. So that's something to keep in the back of the mind if that grows, particularly for central banks like the Fed. Moving quickly to the Eurozone, GDP, the final GDP for Q1, old data, but it came in much better, 0.6% on the quarter versus 0.3% in the priors and in Q4. It may be lagging data, but we saw a little bit of a move in the euro, mainly euro sterling. Got a little bit of a bid on when that data came out. That to me just showed that the divergence trade in full effect there, because euro dollar barely budged. I don't think it moved 5-6 pips on the data, but euro sterling moved. With a stronger number from GDP in the Eurozone versus the worries and woes that the UK are facing at the moment. There's a reason why you'd favour the euro over the pound, and particularly why rates may start rising more over there than they would over in the UK. So from that point of view, euro sterling was down at that 85 handle, nudging around again. We've spoken about the 84, 80 level, didn't quite get down there, but decent data from the Eurozone, and we've seen a bounce there. And as I say, a clear sign of a divergence trade if you want to see one. Moving to the US quickly.
Can I add
last night we got the consumer credit data, which is going to be, again, strongly watched for how the US consumer is doing, what they're doing with borrowing, how they're dealing with inflation. Now the credit card metric, which is the revolving credit, that jumped 19.6%. Now a lot of people I've already seen jumping up and down saying, US people are hitting the credit cards because of the inflation and that sort of thing. But it's worth noting that in the US, credit cards are used more than, say, here in the UK, we would use debit cards to pay for things. The US tend to use credit cards for their everyday spending, and at the end of the month when they get paid, they pay it all off. So although a near 20% jump in credit card spending looks like a big deal, Something like that would be more of a big deal in the UK, because that would definitely insinuate that people are, taking on more debt using the credit card instead of, spending what they've got in the bank. But in the US, it's not such a big deal yet, because they use credit cards as part of their everyday spending. But it still needs to be monitored, because, if we start to see those sort of numbers balloon, then it can indicate higher borrowing, more use of the credit card to pay for things that people haven't got the money for. But overall, consumer credit was actually lower than last month by about 16 billion. So again, no real worries there. The consumer looks fairly robust still spending, and nothing really of worry there. Not too much out on the calendar today at all. We've got the NBA, the weekly NBA stuff, which you guys and girls who've been following the show from the start know is something I look at for a gauge of the housing market. It's been flagging poor performance, and we saw that in all 4 numbers in the main housing data that we saw in May. So let's see if that's going to continue the theme of more weakness, and thus we're going to see more weakness in the main housing numbers. From the UK, no real news out at all. It's been a bit of quiet on the news and data headlines, so we're probably worth getting straight into some of the other bits and pieces. Before we look at prices, just to highlight, just before I'll let you step in a sec, hey. We've got some barriers, talk of barriers in play in dollar yen, up into 134, 134 and a half, and 135. Barriers I'd like to look at, because they can form a formidable wall at some of the big figures. 135 is going to be a big one. Any which way, it's a number everyone's been looking at for a long while. So I'm going to have a crack. I've got an offer in dollar yen at 133.95, just to have a scalp of the big figure. Nothing major. I've got to stop at 134.15. But if that goes, I'll be looking at 135, because I like trading barriers, and particularly around the big numbers, at least on a first test. It's a fairly low risk trade, so that's something I'm going to be looking at. Sorry, Kay, you want to?
Yeah, I just wanted to add, the OECD came out with revisions, right? And so basically lowering all the outlooks a bit across the globe. But one which stood out to me is that they lowered the growth, but still kept some growth for most of the countries. And then the FT added a piece to it, that OECD is actually still the outlook for the UK is still relatively okay for 2023, but they are foreseeing a flat growth in 2024, and that's well below most of the other countries. So not that we have to believe everything that OECD says. It's only forecasts and models and stuff. Models have been wrong before, and many times. But just to keep in the back of the mind that they are forecasting flat GDP for the UK next year. Yeah,
and we had the World Bank out yesterday as well, cutting global growth. So it's becoming a theme that the forecasters at least are expecting economies to start suffering, which falls into the stagflation worries that we've seen around everywhere. So quick look at look at the prices now. We've had a bit of a level in dollar yen. We'll start with that one. We have to do a lot of zooming out in this one at the moment. So here we have the big 135 up here. Way back in 02, big level then. That's the last time we were up here. 133.80 ish has been was a high just after that top we made there, so that needs watching, and we've pretty much run into it today. So it's shown up as a level. We are pretty vertical here, and as we've been saying, the harder and faster it keeps going, the more volatile the pullbacks can be, the greater the chances we're going to see increased jaw boning. Above, if we do bust through this 135 area, we're pretty much the sky's the limit here. On the way to 140s, maybe even more. But it also needs to be reminded that, as Kay mentioned, looking back at the old interventions, what they viewed speculative and volatile moves as, creeping up, spending a whole day creeping up 100 pips doesn't really fall into the volatile bracket. Doing 200-300 pips over the course of 2, 3, 4 days again isn't volatile in their terms. Back in the days when we were down at the 70s and they were intervening, the thing was jumping around 300, 400, 500 pips in a few sessions. That was volatility. So again, it's something to look at. If we start busting through 134 straight up to 135 through 135, then we're entering the high volatility stage, and that again could be another indication of when we start getting jawboning from the officials. But in the meantime, trying to pick tops, very difficult. Everyone likes to try and have a go at a top when they see one, and my view is the same as it was yesterday, and I mentioned it on Face as well, and here in the show is look for the price action to confirm the tops. We had potentially signs of making a top around 133. There were some decent pips in it if you wanted to scalp off the level on the first attempt, but it didn't last long, and then we got the bust up. And already that area 133 is probably the main support from here. Where will other support build? That's going to be part of the picture that you look for going forward in the price action. Where are the dips coming to? At the moment, the dips are coming down to 68, 70 level. That's not very far. So if you're looking to get on the dips, you either wait for a decent pullback down to sort of 133, or you let the price action build a bit, but I'd keep it very tight. It's not something you want to be going with 50 pip stops on, because if you do get a headline, if you do get a move, we are in high volatility. 30, 40, 50 pip swings are not out of the question here. And then also, it's fine to pick a top if you've got a reason to do so. Your reason today might have been this 133.80 level, in which case, you managed to grab a few pips. I'm going to try a scalp of 134 purely because it's a big figure and we haven't traded it for a long while, but I'm keeping it fairly tight. So you can try and pick tops if that's what you want to do, but be mindful of the conditions you're in, and don't go out on a limb doing it. So quick question to you guys guys and girls in the room. Any of you trading this? Any of you short? Any of you long? Do you see us breaking higher up, maybe to that 135, or are we going to find the top somewhere around this 133.80 level? Let us know in the comments there what your views are. Kay, I know you got out your longs yesterday. You got any particular areas you'll be looking at?
I actually got out of the dollar yen long that I had. Just sub 133 was okay. I took 260 pips or so on that one. But I'm still carrying a piece of my Canada yen. The Canada yen broke the 2014 high this morning. I've been scaling back just a bit as one does, and it's my type of trading as well. But I've been running this one pretty nicely since 102.5. As the people in the room know, and I think I might be looking to take my final profit somewhere up in the 107s. That even if it's one way now, the market is going to perhaps exhaust a little bit, because if it's speculative, there must be some of the big funds involved, and they do tend to come around when everybody falls asleep or thinks it's a one-way traffic, and then just go and sell a lump, and then all of a sudden we're back 100 pips lower, right? So I'm thinking of really taking my profit around the 107 zone on this Canada yen, and then reassess. If need, we can still re-enter, and that's how we somewhere. I tend to trade as well. You can always re-enter. That's the beauty of trading spot effects. you can always re-enter the trade. It's even if you take profit, if it continues to go, well, it continues to go. If there is no reason to stop, so we re-enter. But for the time being, I think it's going to be okay, because I'm rarely using the word stretched or the high RSI or whatever. I'm not even looking at them, to be perfectly honest with you.
Yeah.
But at some stage, moves are starting to be a little rapid, and which usually induce some form of profit taking at some stage. Whether it be 133.80 in dollar yen or 135, I don't know. Whether it be 107 in Canada yen or 110, I don't know. But at least I will have locked it in, banked it, and then my account says thank you, and then I can look at something else, right?
Yeah, perfect, and very nice trade indeed. So Anne, just looking at Anne, you're waiting for sellers to come in. I think a lot of people are waiting for that. How do you determine that? The way I'd look at it is again looking to see if a definitive high is made. You know, that's where it tells me that the sellers are parking the bus sort of thing. But I want to see that happen over an extended period of time. The longer the better, because that, as I said yesterday, gives you that greater conviction. Jordan Roberts, nice trade, mate. Got in Friday, but got out. Never, you know, you could have sat in it and run it this high, but you can't have regret over what you missed out on. As Kay just mentioned, you know, you can always get in again. One of the things people need to traders need to fear is the fear of missing out, FOMO. You know, you get out too soon or something like that, and then you want to chase it up because you think you've missed it. But good trade anyway. And you know, and that, one of the other reasons, or one of the ways I look at it is, rather than taking profit, I just use the trailing stop behind. You know, take little bits off. I like to try and sit in a winning trade as long as possible and manage it with a trailing stop, just to stay in as long as possible. That's not a criticism at all, Jordan. By the way, just you know, I want to see you guys and girls maximising these moves and maximising your profits as much as possible. Aledipo, yeah, looking at yields. That's one of the things that I looked at this morning, and hence why I've got a view that this move is more speculative than previously, or even the last couple of days. Yeah, we've seen yields move up, but they're not. You know, I look at US 10-year yields. It's not moving up to the level that it was when we saw fresh highs in dollar yen the other day, and indeed we saw those highs in the yields after it broke the 3% again. It's almost moving half-heartedly up. So really, we've been arm in arm. Dollar yen's been in arm in arm with yields the last several days. Today, it just feels a little bit different. Yields aren't on the bus, and dollar yen's moving without that input. So to me, that's one of the reasons I say why I feel that today's move particularly is a bit more speculative. Let's have a look. Austin, long euro yen for the ECB, but still early. Holding with a tight stop, looking for another USD long this morning for tomorrow. Okay, so I guess you're pretty bullish or hawkish on the ECB. So I wish you all the best of luck with that one, sir. Hope you smash it out the park.
Are we doing an ECB preview tomorrow, Ryan?
Yeah, we could. I've been thinking about putting together some a bit of a cheat sheet. There's obviously usually many permutations for the ECB, and you can end up tying yourself up in knots. So I'm going to just try and do a fairly simple, you know, what's hawkish, what's not hawkish, and put that into some context with the price moves that may happen. Yeah. So yeah, we'll do that tomorrow. Give us some homework to do.
We can look at a few different euro pairs then, because I'm, for instance, long euro sterling, and we can look at different pairs then to see which might move faster or better, which may be the better ones.
Yeah, very much so. So Anne, it's looking like you're a pretty big technical trader there. So you're looking at the shooting star or higher or lower high formation or bearish engulfing. Yeah, you know, you're pretty much spot on. It's however you watch it, whether it's price action or you use the technicals, whatever you use to make those trades and make those decisions. So yeah, well done. Richard, just quickly, where was he? His comments jump around a bit. So Gavin sees some levels up around the 139 area from the monthly chart that you'll be watching. It's one thing I hate when we hit these multi-year levels, that you've got to do a lot of zooming out to find out where the levels are. You know, let's get back into the dollar yen quickly. You know, you really got to look at do some back and forth between the levels. So yeah, that's something I'll do. I'll zoom into this area here around, you know, the 140 to 150 highs and find out, you know, where the areas are that we potentially need to look at, the traffic areas, as I call them. And you can zoom in and look and see where potentially some levels are. So, you know, just as a rough estimate, you know, looking around this 143 area, potential there where we had some support and resistance. But you have to go into these areas, zoom in a bit, go into the 4 hours, come down to maybe the dailies, just to see what levels happened in that period, to then bring them across to today and use them as potential areas where we may see something.
Just
Yeah,
a quick word about this 147 that's been mentioned there by Richard. That was in the days of Mr. Yen Sakakibari was at the helm 10. So we had those two spikes. So there's two reasons why we topped there. And then you see the big decline was the Asian crisis when long-term capital management blew up. But Sakakibara at the helm there, he was he was always calling for the real zone for dollar yen was 125, 145, and you can see back then in those years that once it went above 125, went above 145, and then we had this steep decline, which was for another reason. But just to put some context in that 147 level that we saw back in the days.
Yeah, cool, mate. Have you got? Do you want to take over the chart? There's a question there from Artem. You know, what's the smart way to add to position in such aggressive moves like CAD yen? So I don't know if you want to take over the chart for CAD yen and have a look at that, like the price level, because I know you've got. Where am I going? I know you've got better chart text on there than I have. Let me stop sharing. So while Kay does that, you know, one way of trying to catch a move as it's ongoing is look for the levels that break. Now that's all right to do when you've got confirmed levels, but when you're hitting, you know, multi-year highs where the levels above are few and far between, it does become a bit difficult. From my point of view, you have to wait for a decent pullback to an area that was strong, perhaps strong resistance on the way up. And if you don't get it, you've got to try and sit on your hands. You know, it's easy just to jump in and with your eyes shut, but then, you know, that's a high risk trade. So you either look for levels, resistance levels, and if they become resistance on the way up, and if they show a pattern of price action of hitting that level and become resistant, then, you know, look for a break trade. So set a buy stop, for example, above a particular level. And that maybe then gets you into the trade, because if the level's going to break, if the move's going to continue, then you potentially got a break of a strong resistance area. You watch that area to see if it becomes support after. So there's two ways of entering: enter on a break on a buy stop, or let the break happen and wait for the confirmation retest of the broken resistance. Then you enter. But it gives you, at least it gives you a line where you can place a trade against and place your stops under. You know, if it comes back below the break point, you know, you maybe give it 20, 30, 40 pips. And if it breaks back under, that's where you're wrong. But otherwise, if you're looking at pairs that are busting new highs, multi-year highs, and there's no real resistance in the way, for me, I've just got to sit on my hands and let it go until I get something that tells me to get in. So, Kay, I don't know if you want to expand on that, because, as I say, you've got more text on your chart than I have. Hello, hello.
Oh, sorry, I was on mute. I'm sharing my screen right now. Do you see it?
Yeah, got it, mate.
Okay. I see it's better to show it with a picture about how we did. So first of all, but it's history. But first of all, since and Ryan knows, and the people who were with us know, since the Fed has been starting to change their tone, which was about May, June of last year, I've been looking at being long yen pairs. Ryan was in even before me on the dollar yen, but I've been looking at mostly trading yen pairs from the long side, seeing the change of tone in the Fed and then the gradual increase in their hawkish rhetorics was one. Plus, there was like huge amounts of liquidity in the market. That is normally good for risk. So the stocks were going up, commodities were going up. That's another reason to be short yen for one, for two. And then the third thing, since oil and other stuff where Japan is a big importer of virtually everything, but especially energy, that added another layer to the fact that the yen was at risk of weakening. Plus then a slow Bank of Japan. In those days we were talking about, yeah, Bank of Japan is probably going to raise rates in 3020, not 2020. So those are the fundamental reasons why I started to really trade the long yen. And one of the long yens I've been trading on the way up, besides dollar yen, was this Canada yen. So it's a good one to talk about the Canada yen. So let's take a bit of a look in the bigger picture. So these are the lows of 2020. Okay, I mean this was pandemic territory, panic stations. It was a bit hard to trade anything for longer than a few hours. But starting here, around here, by the end of 2020, it started to be clear that with all the liquidity that there was in the market, that the central banks were throwing in the market and adding, it was started to be clear that some risk factors were oriented to the positive side. So really, I started to be long Canada yen around here. In various episodes, there's some episodes I have not been trading it, but in various episodes I have been long Canada yen since the low 80s, long dollar yen since well, I really remember that one really well. 109, what is it? 109.83, I think. But then on the Canada yen around here, and then the rest is looking who Artem, right, was the one. Okay.
Yeah, look at how you get into a move when it's already gone.
Yeah. Okay. Yeah. So when first of all, to get into a move, you need to have a little bit of a checklist, and I'm always making a checklist, and I just put the arguments pro entering a position in a certain currency. I just lined them up a few seconds ago, and so from there on, you start to look at levels, and you start to look also at the currency that you want to do on the other side. Which one is the one that is going to be inversely impacted by what is going to happen with the one currency. So for instance, in this case, your currency number one is the yen. So I want to be short yen against what? So then you look at what's moving and what is going to support another currency the most. So since energy is going up, Canada is an energy exporter. I mean, Canada was one of the examples. One could have done Norwegian kroner. One could have done at some stage even pounds or something. But Canada was a clear one for me. So then you start to look at levels, and like for instance, here was a big zone. You can see that. Going back to 2016, traffic zone. You start to move above, held by a bit of a trend line. You enter, and then, as I explained, my trading style is I am going to take profit on the way up, because I want to lock in. I never forget the state of my account as well. I want to lock in a little bit, so I'm taking a bit of profit here. But if it goes, I can enter again and put my stop loss below. And then it goes up and up and up, goes into the next resistance. Or in this trend line or here, you might start to take profits again. So you will have a piece left of what you have here. You have an additional piece here, and then it goes up, and you take your profit. Okay, you wait, goes back below. You could have bought here on the trend line and stopped yourself out, but then it goes back onto the level where you bought the last time, goes below, false breakout, bit of a trend line starting to buy. If you didn't buy it here, you could have bought it here again, and then start to build up again, all the while keeping this slice and likely a slice of this one in the books. This is how I like to I really like to do it. And then you have like the bigger trend line coming in here, broken once, failed, broken again, and then retest, and then you go like, wow, this is the third retest, and now it's holding. So you can enter again, and so on and so forth. And every time you start to go into a bigger area, bigger zone, you can then enter again. And the latest one, then I'm going to go more short term. The latest one was this one. So I must say, this whole move, no, not this one. This was okay, but this whole move, I missed it. The whole thing here, I didn't virtually trade it. But then this one started to appear, which is exactly the same one as dollar yen, by the way. So this one started to appear, and as soon as it started to break out again here, I went like, whoa, this could be the start of a new one. So I started to enter again, right? So bearing in mind this was a resistance at 103, I started to take profits around there to start with. But then as soon as it went through, I bought it again. And then you can start to layer again and layer again and layer again. I just took profit on a slice of this Canada yen today at 106.10 overnight, because this was like a fib extension. And but I'm still in a slice long. And now let's see what happens. Okay, the fundamental reasons are still all there. And stocks, well, apart from maybe stocks, they are more like sideways, but all the rest is still there. The interest rate differentials are there. The Kuroda is still not ready to move. The rest of the central banks, and it's not only the US, but the rest of the central banks, like Bank of Canada, uber hawkish, those reasons are still there. So those this position in my last leg long, I'm gonna run it for as long as it keeps running. But I've started to tighten my stops now, because the speed of the move. Sometimes we have to look a little bit at the speed of the move. So I've got a very tight trading stop now on the rest. If it goes back below those levels, I'll be out just for now. So, but as you can see, how you take profit ahead, add through, and in the meantime you can hold a piece from the initial position, because and Ryan does the same thing. We slice and dice, as we call it. So at least a piece of your position is going to go to the whole way, right? So that is about how we do it to keep and to enter and to take profits and re-enter.
So just for example, because you've given the history of the trade as it went. So how would you play it right now? So if you were looking to re-add, something that Artem's saying now, how do you now get in the move? It's right up sitting on the highs. What would you? And I don't mean to put you firmly on the spot, and this is obviously isn't a trade recommendation, but if you were looking to add further to the position, what would you look at now?
Okay, so this is the first one that I spoke about today. Okay, the line, because it's a bigger picture, so it's not exactly correct. It's 106.50 is the high from 2014, and then we go back to 2008, and we have a triple top here, and that's 107.10.15. If nothing really changes, nothing in the picture changes at all, if it goes back to through this, if we start to hold this 106.5, 107, 10, 15 zone, what's going to stop us from going to 110, right? So I'm probably going to try to if we see a break and a hold, and look at this, it's a 1 week, right? So if we're starting to have a break and a hold, I'm probably going to look to run the stuff, or to add again, and to see if we can get up to 110, or we don't know where this yen move can take us to. If next week Bank of Japan says, oh no, we just continue to ease, and we don't even discuss normalization, well, I fear that yen pairs are going to ramp higher in another decent leg.
Yeah.
So, and on the way down, there I have to go down to a shorter term now. No, this is too short. I'd be first looking at this 103.70, 104 zone. I think the 103 is going to be a pretty big zone. If it goes below 103, then there must be a reason, because like there's 350 points already from here. So there must be a reason if we go back to test 103 and go below. We might be here building this thing. If we go back below 103, I'm going to have to think about this long strategy quite thoroughly, because it might mean that something has changed.
Yeah, and that's important too. You know, it's all right saying, yeah, I'll buy a dip at 103, but you've got to understand why you've gone to 103 in the first place. Because it could be a reason that suddenly you don't want to be buying it there, because who knows, the Bank of Japan is up there chatter, or something's happened in Canada or to oil. So yeah, you plan all this stuff out on your charts, you pick your levels, but always remember, before you trade, find out the reason why a price is at a particular level before you jump in, because it might be something that you don't want to do.
There's always a checklist to have. Exactly. And I'm going to straight take the Gavin question, if you don't mind. The reasoning for CAD yen long. Yeah, but the reasoning was, as I explained, it's like, why not gold or silver or whatever. The reason is why I explained it. I take what, in my opinion, would be the best short currency versus the best long currency. And in the picture, the global picture that we were trading in, one of the best long currencies, because oil was flying and Japan is an energy importer, was the Canadian dollar. There were reasons perhaps to buy gold, but they would be standing apart from the reasoning that I had at that time. And also, gold doesn't carry any, doesn't have a central bank which is going to hike rates behind it. So that is also part of the checklist that I'm building when I'm deciding upon which currency pair that I'm doing.
Cool. Yeah. Right. Just to jump back to Richard's question.
Can I, because there was a EuroCAD, since we are on the Canada.
Yeah, go on.
Okay, this one, the EuroCAD, and I don't know who came up with that. Yeah, Kevin. Well, Kevin, very active, good man. EuroCAD triple bottom here since in the last couple of months, and we are on it. 133.90 figure, 133.90, 80. Also a horizontal back in 2015. It's an important level. It's a really important level. I think this one tomorrow after the ECB, we might be in for a little bit of decision making on this one. As I was saying earlier in the room as well, if it breaks below, there's not a lot which is going to keep us from falling down to 133. If in turn ECB starts to get more hawkish than what we think they might do, and that will depend especially on Lagarde, this could be a really strong triple bottom. So yes, we are watching this.
Cool, thanks, mate. Yeah, so jump back to Richard's question. Could someone give some advice on how to use all the data, consumer inflation, jobs, speakers, etc., how to keep them in mind and turn them into a trade idea? Any system that you guys use, maybe? The thing with fundamentals is it takes a while to get used to it and to learn the intricacies of it. You don't need to be a a maths professor or have an economics degree or anything like that to understand fundamentals, you can start with three simple things. What a country's central bank is doing, where the inflation is, and where growth and GDP is. Those are probably the three main things you want when looking at fundamentals. Once you've got that idea, it gives you at least a bias what a central bank's doing, what the data is looking like, what the economy is looking like. And so that already gives you a bias. So it tells you whether central bank is hiking or neutral or dovish, whatever. Because everything that's derived from that is 90% of what we trade in the market, which is expectations of what a central bank is going to do. Everything pretty much we talk about is, does that piece of data mean the Fed are going to be more hawkish or be a bit dovish, hike more, hike less, stop hiking? So once you've got that foundation, then you can delve a bit deeper. So how I use that in my trading is I have it feeds into a path. It gives me a direction for where a country or a central bank is moving. Take the Fed, they're moving in a hawkish hiking direction. Okay, we know that's where they're going. We've had the expectation trade behind it. That's what I really like to trade. I like to trade the turns in the central bank. That's why I was long dollar yen over a year ago, nearly 2 years ago, because I saw inflation coming. I saw central banks would have to start getting out of all these this emergency tightening, and I wanted to catch that change in expectation before everyone else got on it, and pretty much the same as Kay done. So what you look for is, okay, where is a central bank at? What is going to make them change their mind? Now that comes down to the data. So then you can look at the individual pieces. You can come down into more detail, look at the jobs. I look at the little weekly data like I've spoken about the NBA, because that gives me a sense of the wider market for a particular sector. But generally, you just want to look at how the data might impact the central bank of that country, because that's what brings the price moves. So if you get a really bad non-farm payrolls, the market's going to sell the dollar, because they're potentially going to say, oh, hang on a minute, we've got a little bit of problem with the jobs market here. That might mean the Fed aren't going to hike as much. So on that particular day, dollar gets sold off. Now you look at the greater picture, the bigger picture, and say, right, well, that's one negative jobs report out of 35 months of positive numbers. Is that really going to change the market's view? And so I would think to myself, potentially not. So I might look to buy that dip, because I think one number isn't going to change the Fed's mind. So that's given me an opportunity to perhaps get long some dollars and see what happens, see where we go from there. And probably, 8 times out of 10, the market will come to the same conclusion. That's one number. It's bad. Has it changed the trend? Probably not, or we don't know yet. And the dollar reverses over time. So that's how I use the fundamentals, and that's how I build it into a trading plan. But I've been doing this for 30 years, so I can look at data in much more detail and than some of you guys and girls can. But if you aren't used to looking at the fundamentals, if you're not sure the fundamentals, start with the easy points. Where's the central bank at? Where's inflation at? Where's the economy at? And then you can take it from there. I'm going to move quickly to Anne's question in the Q&A. She put this, Ryan, you mentioned yesterday about my dollar yen loss. How do you deal and manage losses? How do you manage your psychological state with losses? What advice can we both give you? Again, this comes with experience and how we set up a trade. When I set up a trade, as far as I'm concerned, in my mind, psychologically, I've lost that money. Whatever I'm going to risk on that trade, it's gone. I've lost it. Because if I'm at that point when I start a trade, nothing's going to scare me. I don't go offside and think, oh crap, I'm going to lose money here. What do I do? I've lost that money as far as I'm concerned. So psychologically, from the start, I've budgeted, if you like, for the loss. So when I do lose, yeah, don't get me wrong, I get the hump. That dollar yen loss was probably the biggest pip loss in quite a few years. And yeah, it's not good, it's not fun, and I hate losing. I hate losing anything, even if that's playing table tennis against my kids. I hate losing. But you have to get your mind in the right space from the start. If you're finding that you're getting worried about it or losses while you're in a trade, you're not in the right place at the start. You know, percentage wise, that dollar yen loss wasn't big. I think it was about just over 1% loss. So hasn't killed me, hasn't killed my account, even though it was a big pip amount. But yeah, it still hurt. But I had lost it from the start because I had my stop in. I knew if that's where it went, bang, the money's gone. Move on to the next one. And once you get your mind in that position, then you shouldn't have any fear, and you shouldn't be worrying about a loss. And you don't stew on losses. If you're keeping your percentage risk low, you know, you shouldn't be risking more than 1-2%, probably even less than that on a trade, depending on what type of trade. It shouldn't hurt the mind if you do lose that amount. Obviously, if you have 10 losses on the trot, you need to look at things and have a reassessment, maybe stop trading. I can do that sometimes. If I have a string of losses, I'll stop trading, maybe moving onto a demo account just to try and work out what have I got wrong? What am I not getting right? Why am I losing a streak? And I can do that after maybe, you know, 4 or 5 losses on the trot. I'll stop trading altogether, just get myself, have a little reset, have a little breather, get myself back in it. But to the main point, you shouldn't have fear when trading, and you shouldn't have a psychological issue when you lose money. And if you're either potentially losing too much money because you're risking too much, or you're not got your mind right from the start. And it takes practice and it takes work. You know, it's always an ongoing thing. I still slip from time to time, as I'm sure Kay does. You got anything you want to add to that, mate?
Yeah, no, that is the same as we've been saying from the start. Really, losses are part of the game. Nobody likes it. Whatever people may say on any platform, emotions will always be part of it. But we have to control the emotions, and the emotions are just control them. And the emotions are controllable if you do good preparation of a trade. Put your strategy in place, put your stop in place, and never risk your whole account on one trade, because that's how people get out of the market. Yeah, I'm convinced dollar yen is top at 133.80, and then there's a stop loss run up to 136, and the account is gone. Well, don't do it. If 133.80 is the top and you're in position, and it starts to go down, then you can add to your position and take advantage of a move lower. If 133.80 is not the stop and is not the top, but you think that was the top, then your risk shouldn't be big enough to make your account feel under too much stress. But as Ryan says, it's experience. Don't think that you're alone. There's as the brokers have to put now on their websites, 65 or 70% of people lose money. So you're not alone, but you have to work on systems, checklists, strategies, so that you start to get part of the other 30%, right?
Yeah, exactly. And Thomas J's made a good point there. You know, revenge trading is the worst. It makes everything worse, like a snowball effect. That's absolutely right. You know, you've got a whole big part of trading is not fighting the market. It's fighting yourself, fighting your own emotions, fighting your own state of mind, fighting your own psychology. And you won't ever overcome it 100%. Very few do. But you've got to get yourself to a level where trading is robotic in terms of how you action a trade, you know, entry, stop, where you're going to look to get out if you're in profit. All that should be robotic, the same as breathing. And from that point, you have no fear. You've lost your money, you accept the loss. And then everything else is the enjoyable part. You know, if you start making money, that's the enjoyable part. If you lose money, hey, so what? You move on. But it's a learning process. And, you know, I know we do this in the show here, but, you know, we push this and push this and push this when we're in the chat room, in the ForexAnalytix chat room. You know, we're there every day when people have these questions, when they have these psychological problems and worries. We're there as a community to say, yeah, okay, this is what you need to look at. This is what you need to do. Here's how we can help you. So, you know, if you're not in our community. If you're not in any community, think about joining a room where you've got traders who are the 60-70% of people who lose money. We hopefully bring that down a bit, and I'm sure we do bring that metric down a bit, because we're in a decent support network. And I need just as much support as some of you boys and girls will need. You know, for all my 30+ years doing this, I still like to ask a question and bounce something off K-Man or one of the other guys in the room, just to get my own mind in the right place. So we're all doing it, and we all continue to do it. It's a never-ending job, unfortunately, but that's trading for you. Well, that's been about an hour, so I don't want to keep you guys and girls for any longer. Apologies if we haven't touched on many of the other pairs. There's not too much going on in things like Euro, dollar, and the like, and we'll get our notes together for the ECB tomorrow. So we look forward to your show. You coming to the show tomorrow. Thank you very much for coming here, and we shall see you tomorrow.
See you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.